Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're looking at housing starts in this clip. It's important to our thesis. This is where the inflation comes from. New loans against new homes, inflationary, blows up. So we want to see what the pace of housing starts is happening and what it looks like. Because if it's going up, that supports the thesis. Even if it remains flat and it's relatively high, that would also support the thesis. So let's dive in here. I'll show you what we got. It says new home construction surges higher amid higher lumber prices in all but one region of the U.S. So looking at the numbers nationwide, U.S. home builders started construction on homes at a seasonally adjusted rate of 1.68 million in November, representing a 12% increase from the previous month. It's an 8% increase over November of 2020. The pace of permitting for new housing units, and this permits usually are a month before housing starts, increased in November. Permitting for new homes occurred at a seasonally adjusted annual rate of 1.71 million, up roughly 4% from October and 1% from a year ago. 1.71, 2 million is a really high number, and 1.71 million is getting up there. So this is going to be sustained inflation with a 1.71 million number if these permits get converted into new home builds or housing starts. Economists polled by MarketWatch expected it to occur at 1.66 and the permits to come in at 1.56. So it's beating expectations. Housing starts rose for both single-family and multifamily projects. The Midwest was the only region where new construction actively decreased overall, with a 7.3% downturn in that Midwest. Meanwhile, the Northeast, there was nearly 28% increase in housing starts on a monthly basis. Looking down here, the increase in permitting was driven by a 6% jump in the number of multifamily buildings authorized, as the number of single-family homes that were permitted only increased 2.7% on a monthly basis. There was a decrease in the number of permits issued for duplexes, triplexes, and quadplexes. There was also a 1.5% increase in the number of approved projects where construction had yet to begin, driven by backlog of multifamily projects. However, there was a nearly 20% monthly increase in the number of multifamily projects where construction was completed. Comparatively, single-family completions were essentially flat as compared with October. So the big picture, and this is what I always like to talk about. As evidenced by the strong optimism among homebuilders, market conditions are highly supportive of a fast pace of construction. Realtor.com estimates that there is a nationwide shortage of roughly 5.2 million single-family homes based on current demand. Within this landscape, new construction is missing link. Millennials are driving that strong demand as they enter their prime home buying years. But unlike with the baby boomer generation, they are encountering an extremely tight housing market. Years of underbuilding following the turmoil of the Great Recession has meant that new home construction has not kept pace with growth in the number of households across the country. So long as that remains the case, home builders will have ample runway to continue building properties. But construction firms face their own set of challenges in terms of labor and material shortages. For instance, Realtor.com notes that lumber prices have surged to $1,100 per thousand board feet, up from a low this summer of $400. Those shortages don't just slow down the pace of home construction, but make it more expensive. With higher construction costs, the sales price of new homes is up about 18% since last year. Residential construction has stepped back from the torrid pace seen earlier this year as persistent supply issues and elevated material costs have capped overall activity. The number of homes still under construction is now at the highest since 1974, as materials take longer to arrive on site. An eventual easing of supply pressure and low inventories should be supportive of building activity even as mortgage rates rise next year. And that's what their opinion is. And when you look at the new privately owned housing starts, it's been updated. We are moving on up the past few months. So we kind of come to these levels, we digest, and we're just continuing to move higher and higher on the new privately owned housing unit starts, which supports the thesis of the channel and eventually will lead to higher inflation rates over time. It'll be supportive of a higher inflation rate. So everything's intact for the housing market. to continue building more and more new homes. And that's exactly what I've been saying. Interest rates, I don't think will slow it that much because the supply-demand balance is so out of whack. Interest rates do not lead housing markets. What usually happens is they lag. When housing collapses, interest rates collapse. When housing expands and we get inflation, interest rates go up. So it's a lagging indicator of what the housing market is doing. And I don't think a lot of people see that as such. They see it as a leading indicator, like lower interest rates are pushing home prices higher. In my opinion, that's completely opposite. It's completely against what history has shown us. Interest rates go up in a booming housing market. They go down in a collapse. And then they just repeat over and over and over with that real estate cycle. Interest rates go up as house prices go up, as inflation goes up. So that's what we've got for today. Give me a thumbs up if you like the content. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.